Good morning, everyone. Hope your week's off to a good start. Yesterday's trading session was much better than last week as far as just the way the market behaved. We've been in this inside of this bigger sell-off bar from Friday. Since Friday, yesterday showed a little bit of signs of getting some momentum to the upside. We have a big uptrend line here that I've got drawn going back a couple of months. That's still pretty steep, and it's even above the daily or the weekly 21 EMA. But just when you pull out to a larger time frame, you can see how steep we've been for the last couple of years, even. So this trend line way back here is going, back 10, 12 years. And then since 2023, we started getting a little bit steeper. This is the tariff sell-off here. Came right down to that trend line. And then in the spring, and then have pretty much been on a rally ever since. Prior all-time highs down here. The last couple of swing lows are marked here. So as we proceed through this week, we're kind of looking for a break of basically a break back into all-time highs. That's where this Friday's bar kind of started its sell-off. It's been a little bit lackluster with scheduled news. So there haven't been many catalysts. Today there's actually nothing scheduled as it is. So we're opening pretty flat with no gap. So we'll see how things transpire. Next week is going to be the Fed meeting and then the meeting announcement on Wednesday. So we'll see if that, there's not much expectation for any surprises, either quarter rate point cut or they hold steady. Either of which, even if Jerome Powell comes out and says we feel the job market is strong, it won't really mean much. We haven't had any data to support or deny that claim, so just kind of in this waiting game. So in the meantime, we'll be watching for good setups, being patient if things are slow, and take what the market gives us. Our overnight range wasn't too big. I can mark the high and low. So pretty much the overnight range just dipped above yesterday's regular trading hours by a couple of points. And otherwise, we just kind of hovered around the gap fill, and our gap is not yet filled. We'll keep our eye on that. Yesterday, there were a handful of pullbacks to the 21, which was nice. I actually didn't take any inverted hammer trades. I did take a halfway back long it was like right after the top of the hour when we pulled back to the 21. We had a larger halfway back long that came within a point. Then we broke the opposing 61.8, and I took the long at the pullback. I had an order sitting out at this first. I was classifying it more as a spinning top, but it was the first pullback to the 21. But then we had these two inside bars, so I canceled it. And that's when I switched to looking for the pullback to the 50% there. But then multiple pullbacks to the 21 and continued kind of up in that trend. So good day for just gaining some insight on the week. Volatility dropped a little bit. It was like down 2.5 points yesterday, but the pace of the market and the follow through and the size of the candles much more like 2 weeks ago before the sell off on Friday. So sometimes the volatility doesn't really have to move much. You just need a few days or a week for the market to settle down, and then things get a little bit less whipsaw and choppy. So but yeah, with no scheduled news, I don't see much for Catalyst this morning, so want to be careful. Yesterday we had pretty strong breadth and advanced decline line as well, right out of the gate with that gap up. Today, not so much. There's our gap fill. Small hammer here, 76 and a quarter. put that order in. Just going to watch here in the first 15 minutes. Filled the gap, came back to the 21, pretty sideways so far. Just kind of using the first 15, 20 minutes as some observation time. Let the market kind of form some swing highs and swing lows, establish itself, get a possible trend going. Yesterday, we had a couple situations where we'd form a hammer and then we formed an inverted hammer. And then same thing, formed an inverted hammer, formed a hammer in the first 10, 15 minutes. So it's kind of helpful to let a little bit of time go by to kind of determine which direction the market is wanting to go here. Decent sized candles. Part of coming into the day with a trading plan doesn't just mean this is my setup. You also want to be cognizant of where you'd like to focus in to take that setup. Meaning, as we get to the 30-minute mark and we can establish the 30-minute high and low, the 21 EMA, 50% retracements, those key levels are areas where you want to really hone in and be more focused, watching for trades and being ready. Know what you're going to do when you get to that point. If the trend is up and you're pulling back to the 21 and the halfway back, it's okay. I'm going to be placing an order at 50% here, or I'm going to be watching for a hammer here as we approach the 21. When the market's sideways, it's more I'm going to kind of sit on my hands and just wait patiently for us to, break out of the range, high, low, where is that range? Have it, just kind of visually marked out in your head. And that way, when you get to those points, you already know what you're going to do. And then it makes it a little easier to, quickly move over to your trade ladder and click on your chart. I have been playing around a little bit with placing trades off of the Tradevate chart. I've never really liked the Tradevate charts too much. If you're using a 1 or a 5 minute or a 15 minute, something like that, they're fine. They're not as clean and sharp looking as TOS, but you can click right on the chart to place the trade. You can do that in Thinkorswim if you're trading with the active trader, but if you're not trading on Thinkorswim, then the lines aren't gonna, trades aren't gonna show up on your Thinkorswim charts. But so remember, we have a big inside day from Friday, which we've been in all last week. Now we're inside of yesterday's range, but in the top quarter. So we're, just like you would draw up a 50% retracement and say, where are we? I got it drawn up already, actually. Where are we in the in the 50% retracement. Are we close to the 50? Are we close to the negative 23? Are we close to the breakout double top point? If we're closer to the 50%, you have more room to get to the negative 23. So taking trades in that direction is going to be worth your risk. As we get closer to the negative 23, I don't want to take trades in that direction because we're running out of runway. So being close to the top of the range, we may have a better opportunity for a breakout. We got 74. This one is a 70. I might take a stab at a hammer long here. It's kind of a big candle, but 70, 75. Let's see if it wants to go. And that would take us up to the 21. This is for sure a counter trend trade, but that could take us up to the 21, which would be at the halfway back. And actually, the halfway back's a bit lower. Let's see if we can get up. That would maybe be a little bit too low to see if we can get at least a +3. But it was in a low tick. I'm going to be met by this halfway back here a little bit sooner than I would have liked, but we're pausing at the halfway back. Get the stop underneath this candle. It's not going to move it too much, but 68.50. Yeah, okay. It was a little bit, that 50% was a little bit low. All right, so our trend for the day is shaping up to be, or our trend at the moment is shaping up to be down, lower highs, lower lows. There was a chance that that hammer could take us back to the top of the range. At least that's what I was looking for there. Great placement as far as the body. We kind of have two hammers in a row, and the bodies kind of line up with the prior lows. But that halfway back just took us down before we could get too much momentum. Nicey ticks really haven't expanded too much. So even though that was a low tick, it wasn't as an absolute value that low. But I'm okay with that trade. When you look at, you can break down, hammers, inverted hammers into more specific setups, double bottoms, hammer at low tick of the day, that kind of thing. And there's plenty of trades where this type of setup, a little counter trend hammer fairly early in the day, can end up being the low of the day. So if you go through and categorize your setups with a little bit more detail and then sort them or kind of group them together by, okay, all double bottom hammers at the bottom of the range, all hammers in an uptrend at the 21 EMA at a 50%, getting pretty specific. You can start to group those trades together, and then you can see which trade setups specifically are giving you profitable outcomes. It'd be nice if I could have the bell only go on when we get outside of like 800 for the NYSE tick. The way that it's set up or the way that it's coded is for low tick, you have, or let's see, alert, down here. It just enabled to play the ding when it makes a new high tick or a new low tick. And once, and then become disabled, repeat it for each tick, repeat it for each bar. Yeah, there's not really a sub category for establishing the value of it, but not the end of the world. So keep in mind our 21 is down. Again, we don't, it's having the 21 on the chart is kind of like using the Hakanashi and the on the 512 tick chart. You don't have to have it. If I had this on just a regular candlestick chart, yeah, we can identify the trend just as well. But with it on the Hakanashi, it does clean it up a little bit. And that's what the 21 does for me. I can just look at the chart instantly and see the direction the 21 is pointing. I could also throw a trend line on there and get the same information. But in the essence of simplicity and a quick validation check, having it on there is handy. You probably noticed I haven't been drawing the market profile on the chart as much lately. I can pretty much look at the prior day's range and determine, okay, this is where the biggest cluster of trade, took place. We kind of have two nodes yesterday about here, and then one a little bit higher at the end of the day about here. And you can kind of, extrapolate out where 70% of the day's range is. We're within value area here, kind of near the point of control. So that it just, I'm fine with not necessarily having those on the chart. The actual numbers, if you're curious, point of control from yesterday, 72.75. Yep, so right where we were just talking. 72.75, be right about here. You could just put point of control on and not value area high and low, but maybe I'll start putting them back on. But if we're hovering around the point of control from the prior day, where the most time was spent the prior day, we're going to see that kind of in both the cluster of trade activity, like we just mentioned on the 15-minute chart, and then also with where the current day kind of hovers. So like if I just put a line through the high and low of the day here, kind of the midpoint where we overlap some of these lows and these highs, that's basically the point of control. And that's where we're kind of 50-50 above and below from yesterday. So visually, you can pull a lot of this information in without necessarily having to have a bunch of horizontal lines in the chart. Because remember, even the 30-minute high and low, yes, um, it's a very defined area, but it's not. It's still an area or a zone. I'm going to draw the halfway back for the day, like so. If we got an inverted hammer here, I would take that short. It's going to be an 68.25. So I kind of, we got about 10 more seconds. I already come in and know where the low is and I'm hovering it on my trade ladder at the moment. And then boom, it closes, drop the order. And so 68.25, then I can come in here and pay more attention. Okay, if we break above the tail, I can close it. If we break down, I know we're going to have an opposing down here. It's be a little bit close, but our trend is down, lower highs and lower lows. It is a valid entry regardless of the outcome. High is going to be a 71 for the stop. And we'll see. Now, our breadth and AD line are slightly more bearish than the open, but if we just go sideways here and don't roll over, then we're going to be closing in on the 30-minute range, and this day is just going to completely die out and be flat, or at least the morning session here, because this is our chance to roll over in a high tick at the 21, at the 50% retracement. If we can't roll over from here, then there is no hope. There's less chance of us doing that later on, but let's see if we can come down and at least make it down, break the 61.8. There we go. 2-tick break. Okay, stop to break even. Out of curiosity, our next 50% would be a 69.25. So stop is at 68.25. So that's a little bit ahead of this next halfway back, but just for kicks. 6-point target is just below lows at 62.25. I bet we can make it there. Nice big red bar. Can leave the stop alone for the moment. Again, you don't have to move to break even, but you want to use the same approach at +3. But you want to use the same approach every time. If you keep your stop a little bit wider and wait for that first swing to form, then you just want to consistently do it that way. Both, ironically or coincidentally, both methods, when I kind of went back through all my trades, produced like within 2 points of the exact same outcome at the end of last year and up until this point of this year. So it's just kind of a matter of preference. I kind of like the auto. I meant to do a video on how I have the auto trail set up on Tradevate, but maybe I'll try doing that this week. But it's pretty easy, and then it just automatically goes. So then you don't have to count and zoom in. Okay, there's our +6. All right, I'm happy with that. And that's, the placement of this inverted hammer is about as textbook as you get. Inverted hammer at the 21 in a downtrend, which is key, at the 50% retracement. So, take a snapshot of that, zoom in, shrink it a little bit, and print it out and stick it on glue it to a note card or something, and then flip it upside down and use that same setup actually, we can do that with a little bit of magic. Maybe not. It works for Guess it doesn't work for futures. But if you put a negative sign in front of the ticker symbol, maybe you have to use the full symbol. Yeah, guess it doesn't work for futures, but it does for stocks. You can turn the chart upside down just putting a negative symbol in front of it, at least on Thinkorswim, and then see the other direction. So, anywho, yeah, that's about as textbook as it gets. And so you see how I think I said this out loud, but as we were coming up to the 21, we've already got the 50% retracement drawn. Actually, we touched it back here. But I'm kind of honing in or zooming in my focus around this area, even as we're trading. Like I have the 50% drawn up, but even like down here, okay, the 50 is going to line up about with the 21. So I want to kind of zoom in and really be focused in watching for that hammer. At a point during the 1 minute time frame, that inverted hammer looks like a big green bar. It looks like this bar here at 650. And then by the time the candle closes, it retraces and sells off, moves down to form the inverted hammer. So you look at the chart and you see big green bar. You don't want to look away because, in 10, 15 seconds, the candle can close and then it's already an inverted hammer and then you're kind of scrambling. So that's why, like, I hold my cursor over the candle. I'm looking up here where the L is. That tells me the low of the candle as I hover over it. Then I look up to the left and I'm looking at the clock. So I know, okay, I've got 20 seconds left and, no rush. But like if I'm looking, let's pretend I'm looking for a hammer long on this candle. I already know the high of the candle would be, the entry would be 67. And then up here, we've got, okay, 8, 7, 6, 5. I'm watching it count down and I know, okay, 67. And then I would come over and I just shift my mouse and click to the entry. So, a couple things happening at once, but if you're prepared to be looking at that area or that price level, 50% retracement around the 21, then you're kind of prepared for it. So let's work it down here. I'm less interested in taking this as a long hammer here because we had a low tick that broke its low and we're in a clear downtrend. So now we'd be really fighting the trend. And then that 50% is going to be lower than the 21, just like the prior one. But let's say I wanted to get long here. We got about 15 seconds, hover my candle. The high of the candle is 63. So that'd be a 63 and a quarter. We got 10 seconds, 9, 8, 7. I'm watching where the high is. Okay, now it went a little higher. So now you're at 63.75. 63.75. Move my cursor to the trade ladder. And then that one pushed up right as the candle closed. That's about as hard to place as it gets. I would say probably 2 and 10 break like that where you're either about to place the order or I haven't even placed the order yet and it moved up a tick. I typically won't chase it if it does that, but yeah, I would say maybe 2 and 10 trades react like that. And if I miss it, I miss it. It's not, there will be another trade. That's another good reason to have a trade log because you can scroll back and see, hundreds and hundreds of trades over the year. And then you go to 2024, hundreds and hundreds of trades. And just, if you keep, I'm sure you can do this in most trading journals outside of Excel, but if you have a little column that has a tag or category, entry at 21 or something. Shorthand is fine. Then you can sort all those trades and see, well, I had 60 trades that all were at the 21 in the trend versus like a CT trade, a counter trend trade. You can sort and see, oh, how did my counter trend trades do for the month, for the last 6 months, for the year? Oh, I'm not getting anywhere with counter trend trades, or, oh, the counter trend trades are working really well. And you can kind of determine which trade setups are working well for you versus not. So see how we formed this hammer. This is a good example of how to discern which hammers and inverted hammers to take or to not take. And the context of the market leading into that hammer does influence whether or not you're going to take the trade or not. So yes, it's black and white in terms of, I would say, maybe 85% clarity on a hammer or an inverted hammer. There's a few instances like this bar here. You hear me say the body should be about 1/3 of the candle. Well, this body is about half of the candle. It is a bullish engulfing candle. It's fairly big. So I wouldn't love that as a long coming up into the resistance area so quickly. But there are times where I will take a long off of a candle like that that's just on the edge of actually being a hammer compared to like this green one, this red one, this one here at 701, all just perfect textbook hammers. But coming into the hammer down here at 701, continue our lower low, lower high downtrend. We have not had a new low tick. Interestingly, our ticks we've made some new high ticks, but again, they're not very high. We're only at plus 150. So not really very useful tick data at the moment. When you get a higher tick rating, whether it's positive or negative, there's fewer opportunities there's fewer combinations that can make up that trade, that nicey tick reading. If you have a plus 1,000 reading, you have at least 1,000 stocks moving up. You could have still a good number moving down, in which case, like if you had 500 stocks moving down, you would have 1,500 stocks moving up, and then the other 1,000 could be unchanged. Here's another potential opportunity for a short. Now we're starting to kind of turn a little bit, but we have not broke the swing high. We're up in a high tick. Breadth is still negative. So we'd be looking at like a 64. And this is going to close big green, so nothing to do there. Thought that was what would end up happening here. Not so much based on the 21 flattening here, but just how we had this red bar and then we took it right back. And we had another red bar and then we took it right back. And opportunities for the market to have even 2 or 3 red bars down here and move lower, and just not able to do that. If we remember going back to our range from yesterday, we're now in the top half, so we're going to be right at the kind of the halfway back, like so. So now what we want to do is remove both of these and draw the full halfway back. That would be our last line in the sand. Need to get our 30-minute range on there. Oh, not quite. Oh, interesting, Mateo. Okay, so well, that is quite helpful. So I've always hovered my cursor over the candle to get the high and low. But as I just learned, if my cursor is off, it does revert to this last candle. So as long as my cursor is not somewhere else on the chart, cool. So if I scroll through it to the downside, it does. Okay, so even if I scroll out from the top left or bottom, it will yes revert to the last candle, even if I'm pulling out a different way. Okay, well that's handy. I still feel like I would want to verify by having my cursor over it, but neat. You learn something new every day. Even though I've been using TOS for almost 20 years. Yeah, so as long as I keep my cursor off of the chart, then you'll get those developing range, open, high, low, close. Cool. Now we have a little halfway back long here. Yeah, Stan, I was just looking for a micro, let's see, micro long, micro halfway back off of the halfway back. So are you talking back here? Is there a little micro short in there somewhere that I'm not seeing? Unless you mean like this. And that would be fine. We broke the low. Distance between the 50 and the 61 is within 2 points. So yeah, that's a fine short. As we get down a little lower, we're starting to get closer to what would have been the negative 23 here. So taking this one is a little bit too low, but yeah, the 65.75 would be fine by me. Yep. All right, cool. Now we want to be careful because we're back inside the 30-minute range. We had a little bit of downtrend action here, but now we're going pretty sideways. We broke the swing high, so we are no longer in lower highs and lower lows. We have moved up to the halfway back, and then we have this halfway back long plus the 30-minute low below us, so we could just kind of ping pong between here for a little bit. We're already about 45 minutes in, so don't want to overtrade the morning and on a day where they're, again, we're inside yesterday's range and Friday's range. Don't want to just either get bored or get excited. Both emotions can be, I guess boredom is an emotion. Both can be, do a little bit of harm to your trading. And it can feel good to have a winning trade, and you can feel less good to have a losing trade. But at the time of the entry, I always ask myself, is this a valid setup? Have your criteria on a note card or a post-it or memorized, and just do a quick check. Are we at the 21? Are we at a halfway back? Simple as that if you're going to take trades in the trend. Is it valid? Yes. Then it doesn't matter what the result is. It is a valid trade at the time of entry. As soon as you're in the trade, now you have more information that you did not have at the time of entry. And this goes for any decision. The book, so we've talked about Thinking in Bets by Annie Duke, more about quick decisions and that thought process. But then she has another book, actually it's called Decision, I believe, that talks about like making bigger choices. Should I take this job or that job? Should I move to this city or that city? Should I go to, pick this college or that college? And a lot of times, some of those decisions don't matter quite as much. Picking a college and things like that, like stuff will work out either way. If you're, should I play football for this school or that school? And it's like, well, you'll never know what the other outcome was, so you make the best of the decision you made. I could have gone to University of Minnesota, University of Illinois, or Arizona State, and it was like, well, it's warm and sunny in Arizona. I can play golf. So, actually, ironically, I kind of quit playing golf when I moved out here. But nonetheless, sometimes you make these big decisions based on just a minor detail, or you got a friend going to a school, or you got a friend in North Carolina. Oh yeah, where should I move, or where should I take a job? Oh yeah, Johnny lives out there. Let's go visit. Oh, looks great. Looks like fun. We'll move there. But anyways, with this decision making process, you only have so much information at the time, and so you can make pros and cons lists, and there are some very valuable assessments to do when you're making a bigger decision, as far as thinking about what could go wrong and how likely those things are to actually go wrong. But you have limited information at the time of making the decision. So then once let's say you're gonna move across the country, this hammer's no good. It's at the 21, but we're still just sitting right in the halfway back here. So if it rips straight to the top of the 30-minute range, okay, now we can maybe look for something up here. But this is still kind of what I would consider in the danger zone. We have a better chance of ripping here. Like, we are at the inflection point where we've stopped going down. The 21 has started to turn up. We've been inside of the 250% here for about 10 minutes. But to me, it's not worth the risk. I mean, you do have a crossover. I'm not going to take that one because it's in the middle, right in the middle of the 30-minute range. But like, this is the break point, if you will. If we can't move up to the top of the 30-minute range here with this momentum, with the momentum we have right now, it's going to be so much harder to do it from down at lows and have to then pass through all of this prior trade again and try to work our way back up. So yeah, it's easy to go back and say, oh, well, I'm just trying to make something up here. Well, like this hammer back here, you could say, oh, well, I guess that's not a good example because it was It was valid. The only downside to that hammer was the 50% was a little bit close. And really, the 50% should have been up here. But since I didn't have that drawn up at the time, I didn't know that at the time, just kind of eyeballing it. And had I known that, could I have made a different decision? Yes. But at the time, that was the best information that I had. We had a hammer down at the prior low. We were up near the top, quarter of yesterday's range. Market in an uptrend, kind of poised to potentially break out. And so, yeah, you make the best decision with the information that you have. And then you don't go back and kick yourself. Um, you know, reflecting on the trade and say, okay, yeah, make sure I know where the opposing 50% is. I could draw that up a little bit sooner when the candle, I could even draw it up from the prior candle. As this candle is starting to form, then I kind of know where it is. So, okay, next time I'll try to get that drawn up a little bit quicker. You kind of reflect on it, make a note of correction, if you will, and then move on. An inverted hammer here would be a little bit too low. It's not quite a double top. Not super interested in shorting here with such a strong, coming up so strongly with green bars, especially if we tick into highs. More than likely come up, kind of arc around the 21 and move its way up to the 30-minute high. Our breath has, come in. So now the AD line's positive and we're kind of right at 1-to-1 on the breath instead of minus closer to 2-to-1 negative. Yeah. We do have room to fall here to the 21. Let's watch it here. Probably end up getting a bigger sell-off within the bar, and it would end up being a big candle. It did have that one winning halfway back yesterday for, I think it went about 6 points. So we got a few points on the board to start the week, but expecting trading to be sparse still until we get out of Friday's range. This is definitely a spinning top. When the market is giving a lot of good setups and a lot of follow through, I'm much more inclined to keep pressing. Coming off last week with very few setups, I didn't even trade Thursday and Friday. I'm more inclined to be conservative and kind of preserve. Good placement on this spinning top. Just commenting that it poked through highs and then came back and closed pretty close to just about a point away from the 30-minute high. Distance between the 21 and that point is about 4 points, so that's good. But yeah, I'm fine passing there. But taking this information in, that yes, we were range bound today, but we did form a solid downtrend, for a good half hour, and then changed into a pretty solid uptrend for the next half hour. You do have this hammer here that we talked about that was right at the 50% long. That was kind of the takeoff point. So even being range bound, we're getting some trending action, which is good without any news today. That's a good sign. Next week, I'll kind of put a bit of a wrench in the mix with having Wednesday of no trade, but with the Fed meeting. But I won't be surprised if we push back into all-time highs again. Another thing to remember is it's okay not to take every trade. Yes, it is important to take valid trade setups. If this was a true inverted hammer, yeah, likely would have jumped on it. We know that spinning top, bullish engulfing, bearish engulfing, those are reversal patterns. But not being in this trade, I'm not sitting here woulda, coulda, shoulda, kicking myself. Oh, I could have made another 6 points. Using this information. Yeah, actually, yeah, high tick of the day. Yeah, 722. Using the information and even coming in here to take the halfway back short. So yeah, lots of signals to take that setup, or lots of signals validating the setup. But what it does help me do, coming off of the context of last week, is kind of start to build more conviction or confidence that we're kind of getting back to a better trading environment. Getting back to it. It was just a couple days of consolidation last week with just a bump in volatility enough to kind of whipsaw around. Wednesday, I had a stop out on a really nice halfway back, or really nice 1 minute. See if I can find it. And it just ticked me out before it could really run. See if I can find it here. This one right here came right to the 21. Beautiful setup. Just dove a little bit deep right after the entry instead of pushing up, and took me out. And then it ran for however many points. And that's just kind of the nature of a choppy consolidation time on the daily. But yeah, seeing this play out will help me trade better Wednesday, Thursday, Friday of this week. Having this, insight or making these observations, seeing us go from top of the range, bottom of the range, back to the top, now almost back to the bottom. That's really helpful information. So you don't need to kick yourself for skipping a trade, here and there. It's not the end of the world. There's going to be more trades tomorrow and the next day and the next day. And you might have a week where it's a tough trading environment, but you should be able to look at the chart and kind of follow a similar progression throughout the day, looking at the swing highs and swing lows, how we respond at the halfway back points, what the direction of the 21 is, and start to put together a picture of, is this a good trading day or is it kind of a dangerous one? And sometimes it takes a half hour to kind of put together that picture. So yeah, you don't need to spend time kicking yourself or being frustrated because it just, then you're just kind of stuck living in the past. Just like in a, sporting event, if you were in an NFL game, you do not have time to be frustrated about missing a catch. You got to get back to the line of scrimmage and, figure out what you're going to do on the next play. Making little observations about, every time I run this route, the safety is on me. So I need to, let's try a different play or run a similar route and then throw it to a different receiver so that I can draw the safety away from that other player. So, you want to be making observations about how you can improve, but to just be stuck on, I was in the end zone and the ball was in my hands and, the safety knocked it out of my hand. It's like, well, nothing you can do about it now. Yeah, but yeah, good eye on the high tick there, Mark. That was one thing that didn't jump out at me. Saw us creeping up, and normally I'm a little bit more on top of those. But again, another kind of important observation about, okay, we had a low tick, and then we move lower without a new low tick, and then getting this high tick sent us lower. So, nicey ticks are, even though they're not very expanded, we're inside of 1,000, still coming into play this week. So then as I come into tomorrow's session, I can use that information, be watching for trades with the trend in at the 21 at halfway back. If we end up range bound after 45 minutes, an hour, I can be looking at the top and bottom of the 30-minute range. Places we're looking at every day, but just a little extra validation from, Monday, Tuesday to start the week. So that's why you don't necessarily want to force trades, especially early in the week, because even if I came in Monday, Tuesday, and even Wednesday for that matter, flat, and I'm starting Thursday with only observations, I can still have, a winner or two Thursday, Friday, and, let's say you had 2 6-point winners, you're at 12 points. If you're shooting for, trying to average 20 points a week, you're over halfway there by only trading 2 days. Let's say you had a loser in the mix, so you end up 9 points a +6, -3, +6, you're still right about halfway there. If I took a bunch of stop outs, especially if I had 2 stop outs Monday, 2 stop outs Tuesday, well, now I'm down 4 and I got to stop for the week. You're still only -12 though. So a winning week of not even getting to +20, let's say you get to +10, does dig you out of that hole. So as a safety net, and even knowing that in the back of my mind, like my worst week is going to be offset by a mediocre winning week. So a lot of those little mental tricks for me always helped me. Stuff like I have a spreadsheet, of course, with with my all my accounts on it. My net worth spreadsheet, but I never include my trading account. So it's like you know you're I almost see it as spent, like the money doesn't exist almost, and I'm just drawing returns off of it. Anything right here is going to be in the middle of the range, not a good place. We're going to be at a halfway back, but again, going back to earlier in the day and any day where we are within the 30-minute range, the midpoint, we did not get a strong sell off at the midpoint, did not get a bounce at the midpoint, so we don't want to necessarily come in here and try and trade at the midpoint. It could, move from here down to lows, but that's definitely a danger zone. Funny how I never noticed the developing open, high, low, close without hovering over the candle. I guess you get stuck in your ways doing things a certain way, and that's just always how you do it. I suppose, yeah, as long as the candle closes and you've identified the high or low before the new candle starts to form, yeah, you'd be in good shape. It'd be cool if you could turn the H into a green and the L into a red, just so it stands out a little bit more, or even like the 2 digits before the dot and after, just so they're a little easier to see. Sometimes these range days can be very good trading days because you get these trend swings within the range. Even though we're entirely within the 30-minute range today, it's mostly entirely, little poke above and below, but 90% of the day, 95% of the day within that 30-minute range. After a bigger sell-off day where you get a candle that's a lot bigger than the prior days and you get that spike in volatility, we only jumped to, I think, 22 or so. It wasn't a huge where we actually stayed. We had a bigger jump right away, but then that kind of imploded on that Friday or on let's see here. I guess this was this past Friday. I was not here for that one. But you have this was the day I was referring to, big spike in volatility on the gap day. And then we fall back down right away. And even in here, 22, that's what I was kind of referring to as the high from Friday. And then we fall back down and we're kind of hovering around 20. Even if we stay, so like even though we're elevated here compared to where we were before that sell-off, the whipsaw and the getting ticked out and getting chopped up just by having a few days go by, that slows down a little bit. So volatility can even stay elevated. Let's say we jump up to the mid 20s or the upper 20s. For the first couple of days, it might seem like, oh, wow, these candle ranges are bigger, putting in trades. And, it came down and I got stopped out on a trade where, normally I wouldn't. After a couple of days go by or a week, things can soften a little bit and then become a more technical thereafter, because you get a lot of reactionary trade, people panicking, different levels of time investors. You've got floor traders, day traders that aren't really interested in the bigger picture. But when you get these bigger sell-off days, you get larger investors selling, panic selling. You get a few smart people, hitting the buy button on the close of a big sell-off day like that, or even before the bell and stuff overnight and stuff like that. Some hedge funds trying to pick up shares cheaper, but let a few days go by, and even if you don't see a big retracement in the VIX, I was going to say retraction in the volatility, you can still get some better trading that then follows. So I think I'll give it a few more minutes, but I'm content on the day. I know we're getting some decent movement, but I think I've gotten out of today what I need for the rest to make it a productive, rest of the week. And I would be less satisfied taking a -3 stop out and bringing me back down, to just a small gain on the day, then I would be happy to walk away with another +6 and have a slightly larger gain on the day. So this way, I take the trade from yesterday and then pad on another, 4 points from today. And it's like, okay, now you're halfway to, a 20 point per week general target. I don't use that as a hard rule, but just kind of as a, rough target. Some like last week, I was -3 for the week, 2 scratches and a stop out. So, I'm not coming in this week trying to make +40, but just kind of seeing, I see a lot of, the week before 22, +28, +17, +7, +16, -0.75, -1.75, +22. Like you get, if you can keep your losing weeks to a minimum and manageable, then getting some +20s in there, a few +30s, +40s occasionally per contract, then things average out real nicely. but you got to be able to limit any damage on the tough weeks. Yeah, for the hammers and inverted hammers, Stan, I've just been doing all in, all out on the +6. This summer with smaller ranges, we just weren't running very far. So instead of keeping that second half of the position to trail, I was just taking it off at the same +6 point, and I just kind of continued with that. If you're going to trail each bar, then it's better to not have a target and just trail each bar, because you're going to, one in, I don't know, I'm just making this up, 1 in 8, 1 in 10 trades will be a 15, 20 point runner. And you need that bigger trade to offset the occasional getting ticked out. Whereas if you leave your stop at -3, let it pull back. Let's see if I can find an example. Let it bounce and pull back to make a little higher low instead of tightening your stop right away, trailing the swing. Then you're going to have more. You're going to be in more trade, stay in more trades. You can get away with just taking the +6 because you get more +6s. Whereas if you have a lower winning percentage, then you need a little bit higher average dollar winner. So I think we'll wrap it up here. Again, we're getting a few hammers, inverted hammers here, but we're, in the middle of this 30-minute range. And that's where, if I didn't have the 30-minute range marked, we can still determine the range. But for me, seeing us go just above or just below visually is very, very helpful. Seeing how far did we dip into lows before kind of failing or turning around, or dip into highs and then turning around. If last week or yesterday, I would say if last week was a much better week and coming in Monday, okay, yep, we're continuing that same trend, 4, 5, 6 setups, plenty of opportunities. Then maybe coming in here and taking this spinning top short, I would have jumped on it because I would have had kind of last week of presumably positive trading. And then, Monday got some points on the board. Tuesday, if I had, a couple of trades, even if they weren't necessarily all going to +6, let's say I got a break even and then ended up with a +3, maybe a +6 in there. Okay, continuing to trade, seeing I'm getting follow through. But with the context of last week being slow, and then I wasn't trading the end of the week, and then kind of getting going again this week, you can just tell, I'm a little bit less likely to be as aggressive, just so that I can kind of build up and start having a bit of a cushion going into the later part of the week. And then I can build off the observations that I made earlier. I mean, even in here, it's like, okay, the range is decent size. What was it, 20? Yeah, about 20 points on the day. So it's not huge, but enough to where, even just the distance of the 30-minute range is 17-ish points, 16 points. So we're, you have enough wiggle room to come down, get a +6, turn around, go the other direction, get in, get +6, get out. So all those observations are good and helpful to take us into the rest of the week. But if you blow yourself up, on Monday, or blow your account up, then you're not around for the next week, month, year. So it is important to, if you're the longevity and consistency, you see it in sports all the time too, especially in the endurance world. It's very easy to do too much and just go, go, go and never give yourself a break. And if you push too hard, then you just burn out. So if you plan small breaks, if you know that, okay, next Wednesday Fed meeting is, I'm not going to trade. You have these little reprieves in there that are built in, and then that prevents you from spiraling, snowballing, diving off a cliff, getting frustrated a week like last week, wanting to make something happen, not having any momentum, and then just forcing a bunch of trades. And then you just kind of, snowball. And I don't exactly know why that was always ingrained in me. I've never blown up an account. I've never, snowballed out of control like that. But that was just always ingrained in me. So from day one, I guess both from a couple of one specific mentor really put in our heads to focus on the risk side first, know where you're going to get out before you even get in, because stuff can go wrong and you need an exit plan. Because if you blow up, if you blow up with 10 grand, whatever. If you blow up with 50 grand, again, not a huge deal. But you see guys in the trading floor, they've traded for 20 years, then they blow up with, 2.5 million, and coming back from that, or they've got, investor capital, or they're trading with a hedge fund, and you're talking millions of dollars. Coming back from that is sometimes that's the end. So I'm not going to trade with these inverted hammers up here. I'm good calling it a morning, but definitely very, very promising yesterday and today. So seeing 2 days of that should give us some good confidence going into the week, even without the news. That's actually probably the most exciting part, to be honest. No news today, no catalysts, and we're still getting some decent movement. Volume is hanging in there. We're not really dropping off much. We had, the big spike and then settled back down. But we've been doing good. So anywho, we'll leave it at that. If you have questions, you can either send me an email or drop them in the Discord. And hope you have a great rest of your day. I'll talk to you all soon.